So paying money to the taxman at the end of every fiscal has got to be one of my least favorite activities, and I think it's safe to assume that for most people, including yourself if you're watching this, most people aren't too ecstatic about paying their hard-earned money towards taxes at the end of the year. Now that said, yes, I do realize that paying taxes is really just a part of life, and it's important to contribute to your community nonetheless to pay for healthcare, roads, and pretty much every other publicly funded activity. However, up here in Canada, personal income tax rates are absolutely insane, especially if you're in one of the higher tier income brackets and depending on which province you live in. For example, if you live in Quebec and make $60,000 from your day job, you would be placed in the second income bracket, meaning that you would have to pay provincial and federal governments a combined $17,300, considering the fact that you wouldn't have any other deductions such as RRSP contributions, personal business deductions, and pretty much any other deductions bringing down your taxable income, which everyone should take advantage of if they can. Now, as I said earlier, paying taxes really is just a part of life and it's important, but if I can benefit from legal incentives to reduce my tax bill at the end of the year, then why not take advantage of them? Hey everyone, my name is Griffin and welcome back to my YouTube channel. So as you could tell from the title of today's video, I bought my first duplex as a rental property, and I wanted to share with you a couple Canadian tax incentives that you can utilize when purchasing your first property. And for me personally, it's gonna save me roughly $5,000 on my tax bill at the end of 2019. So I just wanted to share with you these two incentives in particular so that if you're purchasing your first home or investment property, you can save some money. I'd also like to mention that I will be making a variety of different videos in the near future related to this duplex in question. So things such as going over calculations and funding, renovation videos, and a ton of different subjects. So if that's something that interests you, make sure to like this video and subscribe to the channel so you're notified when I post some new content. Also, let me know down in the comments if you plan on investing in real estate or have already. I'm super curious to know, and hopefully we can start a little dialogue. All right, so back to the video content itself. How exactly do I plan on saving roughly $5,000 in the 2019 fiscal year from purchasing this duplex? Well, in addition to the general tax deductions that you can benefit from when owning real estate, such as closing costs, insurance, mortgage interest, and other expenses, there are two Canadian incentives that I want to bring to your attention if you're looking to purchase your first home. The two Canadian incentives we'll be going over today are the first-time homebuyer plan and the first-time homebuyer tax credit. Now, as the title of these incentives would suggest, the incentives are only valid if you're purchasing your first home or property, and there are a couple technicalities that have to be respected in order to be eligible for them. So since this new duplex that I purchased is in fact my first property, I am therefore eligible to take advantage of the incentives, contingent on the fact that you move into one of the units and make it your primary residence. All right, so let's start by going over what the first-time homebuyer plan is and how you can utilize it to your advantage when purchasing your first home. Essentially what this is the government of Canada is going to allow you to dip into your RRSP in order to provide a source of funding for your down payment. So this homebuyer plan allows first-time homebuyers to dip into their RRSP and withdraw up to $25,000 for a down payment completely tax-free. Now this is important information to mention because typically dipping into your RRSP and withdrawing funds comes with penalties and fees, which highly discourages people from doing so. However, with the exception of the first-time homebuyers plan and the lifelong learning plan, these are the two only times that the government of Canada allows people to dip into their RRSP completely tax-free in a given fiscal year. The only real catch to this is that the homebuyer plan is considered a loan, and therefore you have to repay it back into your RRSP over a period of 15 years, which frankly I think is pretty reasonable. So at this point though, you're probably wondering, well, okay, I understand what an RRSP is, but how does this allow me to save money on taxes when buying a piece of property? Well, the nature of an RRSP is that when you contribute to that account based on your allotted contribution for that fiscal year, that contribution becomes a tax deduction for you in that year. For example, if you made $60,000 in the 2018 calendar year, that means your allowed contribution is 18% of that, considering that you didn't have any carryover, putting your RRSP contribution room at $10,800 for 2019. Now, fast forward to 2019, if you're still making $60,000 a year and contribute that $10,800, that represents roughly a $3,200 tax reduction if you lived in Ontario. The only real catch here, other than the fact that it is a loan, is that the money that you contribute to your RRSP must be in that account for a minimum of 90 days before you can withdraw it for the home buyer's plan and also take advantage of the tax deduction in that fiscal year. Now, since we're on the topic of the home buyer's plan, I'd like to go over a couple other technicalities for eligibility. First of all, the RRSP funds that you borrow must be in your account for at least 90 days prior to withdrawal, as I just mentioned. Also, you cannot have owned a home within the previous 4 years. If you're buying this house with a spouse or a common law partner who is not a first-time home buyer, you cannot have lived in a house yourself that they owned for a minimum of 4 years. You must also have entered into a written agreement to buy or build a qualifying home. You must intend to live in the home within 1 year of purchase as your primary residence. And if you have used the home buyer's plan before, you cannot have any outstanding balance due. Two other things to keep in mind is you must make the withdrawal from your RRSP within 30 days of taking title of the home. And finally, you must be a Canadian resident. Also, if you're buying your first home with a spouse and both of you meet the eligibility requirements for the first-time home buyer plan, you can both withdraw up to $25,000 from your RRSP, meaning you can have a combined total of $50,000 for that down payment. However, if only you or your spouse does qualify for the first-time homebuyer plan, that individual can still withdraw the $25,000 for themselves, considering the fact that they did not live in the other partner's house in the last 4 years. Finally, beginning 2 years after the purchase of your home, you must start making annual payments over 15 years to pay back that RRSP loan. The Canada Revenue Agency will send you a notice of assessment, which will indicate the amount of the loan you have repaid, the balance left to be repaid, and the amount of your next payment. To start repaying the loan, you must make a contribution to your RRSP in the year the repayment is due or in the first 60 days of the following year. All right, so now that we've gone over the first-time homebuyer plan, let's quickly go over the first-time homebuyer tax credit. Unlike the first-time homebuyer plan in which you had to transfer money into an RRSP account and have it sit there for a minimum of 90 days, the first-time homebuyer tax credit is applicable to any Canadian who buys their first home. According to the CRA, the following are considered to be qualifying homes: single-family houses, semi-detached houses, townhouses, mobile homes, condominium units, and apartments in duplexes, triplexes, fourplexes, or apartment buildings. To claim the homebuyer tax credit, you must enter the amount of $5,000 on Schedule 1, line 369 of your tax return. It's also important to mention that you can split this tax credit between you and your partner for a $2,500 credit each, but the total combined has to be $5,000 or less. The reason why I can benefit from these two incentives is because I'm going to be purchasing this duplex and then moving into one of the units in order to house hack and have the other tenant pay off a significant chunk of the mortgage. If you do purchase a duplex or triplex as your first home, it's really important that you move into one of the units and make it your primary residence so that you can take advantage of these two incentives. Otherwise, you won't be able to. So all in all, based on my income for the 2019 fiscal year, these two incentives alone should grant me roughly $5,000 in tax savings, and that's before even considering the other deductibles that come with real estate investing. If we take a broad look here at the comparison between not utilizing these incentives and then utilizing the incentives based on a $60,000 annual salary, here is what the tax difference looks like. So without using the RRSP deduction and the first-time homebuyer tax credit, you'll be paying roughly $17,000 in taxes if you're a Quebec resident, which I am. On the other hand, taking advantage of both plans for a combined $15,800 deductible would put an individual making $60,000 a year in Quebec at roughly a $5,000 savings in taxes. So I really hope that if you're looking to purchase your first home, this video brought you some value and really opened your eyes as to some of the different tax saving incentives that are available to Canadians. After all, these are Canadian issued legal incentives, so not taking advantage of them would really leave money on the table and would be a lost opportunity. I will be making a series of videos related to real estate investing and my experiences owning my first duplex, and most likely I'm going to be acquiring a couple other rental properties over the coming years. So if videos such as that are something that interests you, make sure to like this video and subscribe down below so that you're notified whenever I release some new content. Otherwise, on the channel, we talk about a ton of different personal finance topics such as investing in the stock market, high interest savings account, frugal living hacks, and a bunch of other things. So if that interests you, hit the bell button down below so that you're instantly notified when I release a new piece of content. So on that note, thanks a lot for watching this video, and I'll see you in the next one.